monthly update on the Indian economy, November 2024. Welcome to India Business Insights. Here is the latest monthly economic update for November 2024. Stay tuned for the highlights and key developments shaping India's economy. If you like to keep yourself updated about the Indian economy, please stay on till the end and consider subscribing to our channel and do not forget to press that notification. Also, please explore our channel to see our wealth of content, information and analysis on Indian business, companies, markets, economy, government policies, business and commercial laws and more. Number 1. CPI, Consumer Price Index. In November 2024, India's headline inflation as measured by the Consumer Price Index increased to 5.7% compared to 5.6% in October. This rise was primarily driven by persistent food price inflation, particularly in vegetables, cereals, and pulses. Seasonal factors exacerbated the price volatility, as uneven rainfall during the monsoon season disrupted crop yields. Vegetables, especially onions and tomatoes, saw sharp price hikes, contributing significantly to inflation. Pulses and edible oils also remained high due to supply chain bottlenecks and rising global prices. The fuel and light category continued to see deflation, reflecting the easing of global crude oil prices and reductions in domestic LPG prices. However, the moderations in fuel prices was insufficient to offset the inflationary pressures from food. Electricity tariffs and firewood prices, though stable, contributed marginally to the CPI's uptick. Urban inflation at 5.5% was lower than rural inflation, which stood at 5.9%. The divergence reflects the heavier weight of food items in rural consumption baskets and the higher impact of supply disruptions in rural areas. Core inflation, excluding food and fuel, moderated to 3.8%, the lowest level in over 4 years. The government has introduced measures to tackle food inflation, including increased procurement under the Public Distribution Systems (PDS) and promoting imports of essential commodities to ease supply constraints. However, economists warn that sustained inflation could erode consumer purchasing power, potentially impacting demand in the long term. The RBI's Monetary Policy Committee (MPC) has maintained its repo rate at 6.5%, focusing on balancing inflation control with growth support. Policymakers are optimistic that the Rabi harvest, along with fiscal interventions, will help moderate food inflation in the coming months. However, external risks such as rising global commodity prices remain a concern. Number 2. Foreign exchange reserves. India's foreign exchange reserves stood at $657.9 billion in mid-November 2024, marking a marginal decline from the previous month's $675.6 billion. The reduction reflects increased imports, especially crude oil and gold, amid stable export inflows. Despite the dip, reserves remain robust, providing coverage for over 9 months of imports and ensuring resilience against external shocks. The decline in reserves also stems from the RBI's interventions in the foreign exchange market to stabilize the rupee, which faced pressure due to capital outflows and global uncertainties. The rupee remained relatively stable against the US dollar, supported by the RBI's measures to mitigate excessive volatility. FDI inflows into sectors like renewable energy, technology, and pharmaceuticals have been strong, reflecting India's growing appeal as an investment destination. However, foreign portfolio outflows in equities have posed challenges, particularly in sectors sensitive to global economic conditions. Policymakers are working to attract more long-term investments, especially in infrastructure and green technology. India's reserves are critical for ensuring economic stability, especially amid global financial turbulence. The government and RBI continue to prioritize maintaining adequate reserves to protect against balance of payment shocks, manage external debt obligations, and support domestic currency stability. Looking ahead, analysts expect reserves to stabilize, supported by increasing remittances and a potential recovery in exports as global conditions improve. Additionally, India's push for renewable energy development and digital transformation is expected to attract sustained FDI inflows, further strengthening reserves levels. Number 3. Export-import dynamics. India's exports showed modest annualized growth of 1.2% in November 2024, despite challenging global economic conditions marked by weakened demand and geopolitical uncertainties. Key contributors to export growth included pharmaceuticals, electronics, automobiles, and agricultural commodities. Pharmaceuticals continued to shine due to India's dominance in the global generic drug market, supported by strong demand from emerging markets in Africa and South America. Electronics exports also benefited from the Production-Linked Incentive (PLI) scheme, with increased production and exports of mobile devices and semiconductors. Agricultural exports experienced steady demand, particularly for rice, spices, and processed foods. India's rice exports remained strong, driven by robust demand from Southeast Asia, where production shortfalls have created a reliance on Indian grain. Similarly, the spice market showed resilience, with pepper, turmeric, and coriander exports to the US and Europe increasing due to their perceived health benefits. Exporters also benefited from India's streamlined trade facilitation efforts, such as quicker customs clearances and reduced logistical bottlenecks. Despite these successes, sectors like textile and gems and jewelry faced challenges due to weaker demand in Western markets, particularly the US and Europe, where inflationary pressures have dampened consumer spending. Textile exports declined as global apparel demand softened, impacting India's traditional export hubs such as Tamil Nadu and Gujarat. Similarly, demand for gems and jewelry remained subdued, reflecting reduced discretionary spending in developed markets. To bolster exports further, the Indian government has focused on deepening trade relationships with non-traditional partners. Agreements under negotiation with Gulf Cooperation Council (GCC) nations and African economies aim to diversify export markets and reduce to overdependence on Western buyers. These efforts are complemented by the RODTEP, Remission of Duties and Taxes on Exported Products scheme, which has enhanced the global competitiveness of Indian goods by reducing export costs. The government's PLI schemes across various sectors have significantly contributed to export momentum. For instance, electronics exports, including mobile phones and semiconductors, reached a new high as global companies like Apple and Samsung expanded their manufacturing bases in India. Automobile exports have seen growth, particularly in two-wheelers and electric vehicles, driven by demand from African and Southeast Asian markets. In renewable energy equipment, India exported solar panels and related components, marking a growing contribution to global green energy markets. In imports, India's crude oil purchases remained substantial due to high energy demand, contributing to the widening trade deficit, which reached $8.3 billion in November 2024. However, investments in renewable energy aim to curb this dependency over time. Meanwhile, gold imports spiked due to seasonal festive and wedding-related demand, exacerbating the trade imbalance. Future outlook. Analysts expect export growth to gain momentum in coming months, fueled by further diversifications into non-traditional markets and increased production capacity under government-backed initiatives. However, global uncertainties and slower demand in major economies remain key risks to sustained growth. India's focus on infrastructure upgrades, trade negotiations, and production incentives will play a critical role in shaping export trajectory. Number 4. GDP growth. India's GDP growth for Q3 FY25 is estimated at 7.3%, supported by strong domestic demand and government investments in infrastructure. High-frequency indicators like GST collections and e-way bills pointed to sustained economic activity in November 2024. With e-way bills growing by 8.5% year-on-year, the services sector continued to drive growth, particularly in IT, healthcare, and financial services. Private consumption, a key driver of GDP, remained resilient despite inflationary pressures. Government spending on infrastructure under the National Infrastructure Pipeline (NIP) contributed significantly to fixed capital formation, which accounted for 35.3% of GDP. This has supported employment and economic activity across sectors. The manufacturing sector has shown mixed signals, with strong performance in pharmaceuticals and electronics, but slower growth in traditional industries like textiles. The PLI scheme continues to drive investments in high-value manufacturing, boosting productions and exports. Meanwhile, rural demand has been subdued due to lower kharif crop output, which may weigh on consumption in the coming months. The RBI expects growth momentum to sustain, driven by robust domestic demand and easing supply chain pressures. However, global risks such as a slowdown in major economics and geopolitical tensions remain key challenges. Number 5. Industrial production and manufacturing growth. India's Index of Industrial Production (IIP) registered a growth rate of 3.8% in November 2024, reflecting resilience in core industries amid global headwinds. This growth was driven by robust activity in the mining and electricity sectors, which expanded by 4.2% and 6.1% respectively. However, the manufacturing sector, which accounts for over 75% of the IIP, showed moderate growth of 2.9%, signaling challenges in traditional industries like textiles and small-scale manufacturing. Within manufacturing, sectors like pharmaceuticals, electronics, and automobile productions recorded strong growth, supported by the government's productions-linked incentive (PLI) schemes. For instance, the electronics sector benefited from increased exports of smartphones and semiconductors, with companies like Apple and Samsung ramping up production facilities in India. Similarly, the automobile industry saw robust growth in electric vehicle production, supported by rising domestic and international demand. The infrastructure-oriented industries, including cement and steel, recorded mixed performance. Cement production dipped slightly due to a high base effect, while steel consumption increased by 4.5%, driven by ongoing infrastructure projects under the National Infrastructure Pipeline. Core industries like coal and natural gas also showed positive trends, contributing to the expansion of power generation. Despite these gains, challenges remain in sectors like textiles and small-scale consumer durables, which are struggling with rising input costs and subdued global demand. Policymakers are emphasizing digitalization and automation in manufacturing to improve productivity and global competitiveness. Future outlook? With government-backed incentives and increased infrastructure spending, industrial production is expected to maintain momentum. However, growth will depend on mitigating global risks and addressing supply chain disruptions in key sectors. Number 6. Employment and labor market trends. India's labor market showed signs of stabilization in November 2024, with the unemployment rate declining to 7.0%, a marginal improvement from the previous month. Job creation was strongest in the service sectors, particularly IT, retail, and logistics, which benefited from festive demand. The agriculture sector, meanwhile, saw seasonal job losses post-Kharif harvesting, contributing to rural unemployment. The technology sector continues to dominate job creation, fueled by high demand for digital services, cloud computing, and artificial intelligence solutions. Startups and e-commerce platforms like Flipkart and Amazon also ramped up hiring ahead of the festive season. However, job opportunities in traditional sectors such as textiles and construction remained constrained due to global demand challenges and rising input costs. The informal sector, which accounts for a significant portion of India's labor market, has struggled with wage stagnation and limited access to social security benefits. Government initiatives like Skill India and the Atmanirbhar Bharat Rozgar Yojana aim to provide upskilling opportunities and financial incentives to formalize informal jobs. Youth unemployment remains a key challenge, with many first-time job seekers struggling to find roles that match their skills. The government's focus on vocational training through initiatives like Pradhan Mantri Kaushal Vikas Yojana (PMKVY) has shown promise, but its reach and impact need to expand to address the growing workforce entering the labor market each year. Future outlook. Employment growth is expected to improve in the coming months, driven by infrastructure spending, manufacturing growth under PLI schemes, and rising demand for technology-driven roles. However, long-term structural reforms are needed to ensure stable job creation and wage growth, especially in rural and informal sectors. Conclusion. In November 2024, India showcased economic resilience amid global uncertainties. Inflation rose to 5.7% primarily due to food price pressures. Though core inflation moderated to 3.8%, offering some relief, foreign exchange reserves remained strong at $657.9 billion, despite higher crude oil and gold imports widening the trade deficit to $8.3 billion. Pharmaceuticals and electronics drove export growth, while imports surged due to energy and festive season demand. Industrial production grew by 3.8%, led by mining and electricity, though traditional sectors like textiles struggled. Employment trends showed marginal improvement, supported by job creation in technology and services, while rural job losses and youth unemployment persisted as challenges. With GDP growth estimated at 7.3% for Q3 FY25, India's strong domestic demand and infrastructure investments remain pivotal. However, managing inflation, reducing trade imbalances, and driving structural reforms will be crucial for sustaining growth. These detailed updates reflect India's economic resilience in November 2024, while highlighting persistent challenges like inflation, trade imbalances, and external uncertainties. Stay tuned for next month's update.